Okay, so good morning, everyone. Um, from wherever you are listening to me or from where you are hearing my voice, today we shall continue again with the class. Yesterday, I tried recording the chart of accounts lectures, but I discovered that majority of us were complaining that we couldn't hear the audio properly. So let's just go straight to Zoho. Let's just go straight to Zoho. Like so, we just go to Chrome. Once you go to Chrome browser, then just type Zoho. Yeah. So just type your Zoho. Sorry, Zoho. So I quickly want to show us. So we go to an account that is already open. So we click on the account and then let's see what comes up. Yeah. So this is it. This account has been created already. So now since this account has been created already, then we need it, I just created this account and we needed to send an OTP. So yeah, so we now have this. So I'm trying to like log into this. So I come here. Okay, so let me try and see if I can get this done. So I think have I been able to verify it? Yeah. So when we come here now, this is a new company. We have the email address, everything is there. Then we are checking for so it's still talking about inability to verify the stuff, right? So at the end of the day, you let's go to another account that we have already. Probably that is going to be better. I need to come back and tell us how to go about this. But let's assume I want to enter with another account because I can't start verifying this one now, except I start logging in into my account, but I don't want to do that yet. So let me just sign out of this and just impute another account. Then probably we can come back. So let me log in with this one. Okay, this is another account, and then this is fine. So here we are already, this is a company, right? That we have over here. Now we continue from here to yeah, we continue from here to the main account, and then this is the main account that we are to see. Yeah, so this is the main account. Then what we want to do is we want to go straight to the home portal. So we click on this place. Then we go to the bottom and select Zoho Books. Let me look for it. Finance. Let me see. Yeah, finance. Finance services. Email. Yeah, so under finance, right? So we want to go to our books. Yeah, so that's fine. So I'm just trying to like do like a follow up on yesterday's class. So from here, the original is okay. paper, Um, okay, so this is what we are. This is what we have here. Okay, so here we now come to this place where we have our accountant. From the accountant, we need to create our chart of accounts. So you create chart of account. So under this space, this is how where we're going to do our chart of accounts and every other thing. So, and that is why after we've created our chart of accounts, we need to first of all create our chart of accounts on Excel, which is what I'm trying to teach us. After you create a chart of account on Excel, then you now come back to Zoho Books and come to either import it. So you can come here, click on this drop down, you see where they say import. So you click here to first of all export the format of chart of account that we have on Zoho Books. When you export it, then You now go and populate it with this new chart of account that we've populated. Then you can easily go and import it back. So this is the chart of account that we're working on. So what is unique about this chart of account? The first thing is it has a code range, which is going to be numbers, number one, number two, number three, number four, number five, number six, and number seven. Another thing that is unique about this chart of account is that it has an account class. So under account, we have five elements of account. We have the assets, we have liabilities, we have equity, we have income, we have expenses. So expenses are usually divided into three. Expenses we talk about in terms of hierarchy. How important is that expense to the organization? The most important expense to the organization is the cost of sales because it's directly related to the income that they are generating. So we deal with cost of sales first before we now start talking about operating expenses and also talking about administrative expenses. So in general, there are actually five elements of account, which is asset, liability, equity, income, and expenses. Now, what we did is that our expenses, we further broke it down into three sections. So we have the cost of sales, we have the operating expense, we have the administrative expense. So that is how we were able to generate this. Then the next thing we are looking at is that apart from us having this asset, there are classes of assets. We have the first class is the cash and cash equivalent. After that, we have the account receivables, we have the other current asset, we have prepayment, we have inventory, we have property, plant, and equipment. So let's now look at what we need to do. Let's go and create it afresh. I don't want us to just dwell on this because you might not really get the gist of the story. So I might need to come here to take some things instead of me typing it again, afresh again. I've done all these yesterday and I cannot just go through the stress again. But let's see, I just want us to have a detailed understanding of what needs to be done so that when you are trying to approach it yourself, you can also do it and then there will be no issues. So let's come to a new sheet because we want to learn, right? So the first thing we're going to do is we need to create. So let me extend this thing a little. That's the first thing I want to do. So yeah, it's too much. Ctrl Z is too much. So I'm going to extend it a little. Okay, I think it's fine like this. So the first thing we're going to have here is we're going to have what we call the code range. So this is the code range, right? This is a code range. That's the first thing. The next thing we're going to have what we call the account class. The account class is the next thing we're going to have. After that, we're going to have classification. Classification. That's the next thing. The next thing we're going to have, apart from that, we're going to have the codes of accounts. The codes of the accounts, right? Code of accounts is different from the code range, right? The code of the account. Then the next one we have to have is we want to have what we call description. Description is the next thing we want to have. Then the final thing we will have is we talk about the account. The account type is the last thing we are going to have on the page. So all these headings are the first thing you need to get intact. The first heading is the code range, followed by the account class, followed by the classification, followed by every other thing. So the next thing we want to do is we want to color it to make it look good, right? So let me also try and increase this two. So we increase that a little, and that is fine. So let me come over here. No, yeah, stay in the call. Yeah, so everything is working fine. Recording is recording. You can see the screen. So beautiful. Now let's continue. Let's come over here. So we've had all these items, right? So the first thing we're going to have under the code range is the numbers. The first account. Now there are five elements of accounts. So I need to also let you know that there are five elements of accounts. And that five element is what we normally use when we are trying to create the chart of accounts. So the five elements, the first one is what we call the assets. So the first one is what we call the asset account. So assets, the asset account. So that is number one. Number two, among the element of account, we have what we call the liability account. Liability. We have the liability. Number three, we have so it's like what's an opposite? Asset. The opposite of asset is going to be like the liability. Then number three, we have equity, equity, equity as the case may be. Then the next one, number four, we have what we call the income, right? We have the income. Then the last but not the least is the expense. Now, this expense now, we're not just going to put expense like that. We're going to now look at the hierarchy in terms of the hierarchy, which is more important, which kind of expense is more important to the organization. So the expense that is more important to the organization is the cost of sales, is the first one that is very important to the organization. So we have that first, cost of sales. Then after we've gotten the cost of sales, then we go to still expense. We come to number six. We now talk about another expense class. So this expense class now is what we call the operating expenses, operational expenses. So operational expenses. Then the last but not the least is when we now talk about the popular one that we know, which is the what is it called? Administrative expense. So this is the administrative expense. So if you look at what we have done, what we have done is that we have been able to look at the headings that we should have, right? The first one is the code range, which, we're just looking at the numbers of accounts that we have, right? So I told us that naturally we have five account class, right? So classes of account, we have just five. So we have the asset account, we have the liability account, we have the equity account, we have the income account. The last one is supposed to be the expenses account. But this expense account is further broken down into three. We have the first one, which happens to be the expense that is very important to the organization, which is the cost of sales, followed by what we call operational expense. Then the last one is what we call the administrative expense. So once you understand this place, the next thing is that when I say, okay, this asset that we have, right? So asset is one of the things that we are considering. This asset that we have, what is the classes of assets that we have? We have actually I think there are five classes of assets, if I'm not mistaken. Okay, so we have five classes of assets, if I'm actually not mistaken. So those classes of assets, we are going to treat them well. We are going to treat them well. Then after we are done with assets, then we'll now go and check for other things that we also need to consider in the class. So quickly, let's get it started, right? So now, apart from us getting all these code range, account class, which we understand that we have five elements of account, are booking it down for us. Then the only difference is that we only extended our expense, we expanded our expense account to show in terms of hierarchy to the organization. Then the next thing we want to do is we want to move further and check for the classes of those account heads that we have. So the class, so asset. Now, what are the classes of asset? Now, before I also go and talk about the classes of asset, we're also going to talk about the codes of accounts. So you discover that the asset is the number one, right? So since asset is the number one, what we do is that we call asset, we begin our code of account from 100,000. So we say this is 100,000. So that is for asset. Then for liability is the second item on the list. So we are going to say this is 200,000, 1, 2, 3. Then the next one, equity, is the third thing on the list. We are going to start our code from 300,000. Then the next thing we have, after equity, we have income. So our income is a 14 on the list. We're going to start it from 400,000. So that's what the code is going to be. Then the um, cost of sales, which is expense, is a 15 on the list. It's going to be 500,000. Then the next one we're going to have the next thing, which is the sixth item on the list, is going to be 600,000. Then the last but not the least is the administrative expense, which is going to be 700,000. So that is the code of account. So it means that the first item that we are going to have here, we are going to start it from 100, then, and let's just jump and 10. So let's now look at those. What are the types of account asset that we have? Basically, we have five or more than that. We have five type of accounts. We have the what is it called? We have the cash and cash equivalent. That's the first one. So there are actually five classes of account. We have the first class is going to be um five classes of asset. I mean to say, sorry. So five classes of asset. The first one is cash and cash equivalent. So I want to make it capital letter. So this is cash and cash, cash and cash equivalent, equivalent. So cash and cash equivalent, that is that. So now under the cash and cash equivalent, what are the things that are under cash and cash equivalent? So that is one of the, so let me leave some gaps. I want to show us. So now after we've gotten the first asset that we have, the first class of asset is cash and cash equivalent. So what are the things that we have under cash and cash equivalent? So the first thing is we have every asset that are liquid, things that you can easily convert to money. So what are those things that are very liquid? The first one is going to be the main cash account. Okay, so things that you can easily convert to money. So the first one is going to be the main cash account. So we're going to say the main cash account. Okay, so if there's any account like that, so what account type is that? That is cash, just like the name implies. So it's a cash account. Then apart from this main cash account, what are other things that are also still very liquid? Because cash and cash equivalent, they are the type of asset that are very liquid. So apart from that, we can have petty cash account, right? We can have petty cash account. So we now say um cash is also a cash. It's also a cash account, right? Put dash. We now say petty cash. Come in, just give me 2 minutes. You say petty cash. Okay. Yeah. So we say petty cash. Petty cash. Probably you have petty cash account. Probably you have the so what I want to do is that I want to create um an automobile company. Okay. So the automobile company I want to create, the kind of chart of account I'm going to also create must be tailored towards that automobile industry. So when we have the petty cash account, let's say this petty cash account is handled by the admin department. So we have a petty cash account that's handled by the admin department. And obviously this one also is also a cash account type, is also going to be cash. Then the next one, then the code, we can talk about the code later. After we've talked about the cash, petty cash, okay, then let's now say probably we have another petty cash account which is handled by the workshop, right? Because I'm looking at an automobile industry where they repair cars and all that. They repair cars, they fix cars and all that. So we can say, okay, we have another petty cash account which is handled by the workshop people. Okay, so workshop. Yeah, so this is workshop people. They handle it by the workshop people. And obviously, this is also a cash account. So since all these things are all cash account, then what do we want to do? What do we want to achieve by this information? So since they're all cash account, right? Then what we're going to do is that let's now, they're all cash, right? So let's now fill these things. So from here, I'll just want to hold my control and go to the autofill and do like drag it down. So they are all cash accounts. So they are going to follow each other. After 110, then that will be 111, 112 because they are all cash accounts. If there's any other cash, we say 113, 114, and so on and so forth. So let's assume that is the only cash account that we want to observe for this organization. Now, what other thing is also very liquid? And that thing that is also very liquid, or still under our cash and cash equivalent, is the banks that we have. What are the bank balances that we have? So let's assume you have there are banks that you use for your company. Let's say you are using a Money Point. Okay, let's say you are using Money Point. Money Point, for instance, I'm just giving an example. It depends on the kind of bank that you're actually making use of. So I'm just want to list out all the accounts that you might likely all the banks that you might likely use for your organization. They'll say Money Point Impressed account. So you can have Money Point Impressed account. And obviously, this is not a cash account because it's a bank. So we call this one, this is going to be a bank, right? So the next one, apart from Money Points account, you can have any other account. So we have any other account, you can have any other account. So we say probably this is we can say this is Fidelity Bank account. Okay, so you can have Fidelity Bank account is also a bank, right? Then the next one you can have apart from Fidelity, you can have Wema. Okay, so we say we have a Wema Bank account. Wema Bank account. So Wema Bank, then we say account, right? So Wema Bank account, and then here is also a bank. Then the next one, we are looking at the last one. You can have as many as possible. But for me, what I want to use is the next one. I want to talk about Providus Bank accounts. Okay. So Providus Bank account, and here as well is a bank. So once you've gotten that, now you know that the first thing is we are done with the asset. I can delete this one here so that it doesn't confuse us. So this is asset. Then we now look at the classification of the asset. The first asset on our list of assets is cash and cash equivalent. And we see that cash and cash equivalent, that is, those are the, according to liquidity, cash and cash equivalent is that type of asset that can easily be converted to cash. Probably you have an emergency, you have a crisis, you quickly need money, you can easily go and take money from your cash account or your bank account. Okay. So since we are done with our cash and then we have it there like that, so let's now go here and talk about bank. So we now do 100 020. So you can see the way I move. The first, because it's cash, they are all taking 110. But because here are banks, they're taking 120. So all asset account, they are going to be 100. But I'm going to show you how we are going to now differentiate them. All of them are going to start from 100. So we now come over here. Since all these ones over here, from here like this, they are all banks, right? So we can just click here and autofill this thing to where the banks are. So fine. So we are done with the first classification of assets, which is the cash and cash equivalent. Now let's go to the next cash and cash equivalent in order of liquidity. The next one that is very liquid among the assets is what we call our debtors, what they now call account receivable. What they call account receivable now is another thing that is actually very liquid, right? So your account receivable, you can quickly, when you have a crisis, you can quickly run to them and tell them to give you money. You quickly want to use money for whatever thing you want to do. So it's also another asset. So when I say account receivable, so account receivable, so that is another one. So if um if cash is taking 10 and bank is taking 20, then this is going to take 30. So we say 100 030. So it's going to take 30. So then what kind of account is it? The description is also account receivable, right? Here as well is account receivable, sorry, account receivable. So that is that. Then what other, so we are done with all the account receivable. So in terms of liquidity, another asset that can easily be converted to cash is go and meet the people that owe you money, your debtors, right? So go and meet them and quickly tell them that you need the money for a certain project, and then they can look for it, squeeze out the money so that you can have the money for your usage. Now we are done with that. What other kind of assets do we have? Obviously, we have not. We still have like property, plant, and equipment. We still have inventory. We still have prepayment. We still have other current assets. So let's look at the next one. Let's talk about, in terms of hierarchy, let's talk about other current assets. So assets that are current, right? Other current assets. So now here, if this last item took 30, then obviously this is going to take 40. So say 100, 040. So this is going to take 40, and that is fine. So what are the other current assets that we may likely have? Other current assets that we may likely have. Number one among the list, we can talk about, maybe there is a cash sales, right? So maybe there's a cash sales, okay? Maybe there's a cash sales. Then this goes to other current assets. So it goes to other current assets. So we can copy this one, other current asset, and come and put it here. So let's just put it as many current assets that we could possibly have. So other current assets. So that is the cash sales. Then the next thing that we can also have is we can have staff debtors, right? If you have staff debtors, they are owing you, right? But these are staff, right? They are not customers. Staff debtors. So this is staff debtors. So yeah, so that's another current liability that we other current liability can have. We can have staff work advance. You can have staff work advance. You can have staff salary advance, staff salary advance. You can have staff salary advance. You can have the last item. You can have withholding tax, withholding. Probably they deducted withholding tax from your invoice that you sent to a customer, and they deducted withholding tax from it when they want to pay you. Okay, so this is the account that warehouses that withholding tax that they deduct from your account. So we have so it's um other current asset actually. So when we have all these things, so they are all other current assets. So what do you want to do? Let's now work on their code of account. So they are all other current assets. So from the first one that we've gotten, we can just auto fill it down. So we just press auto fill, and voila, we have done with this. Now, if that is the other class of asset that we have, is that all? No. We still have another kind of asset we call prepayment. There are some items that you paid for, some expenses that you paid for in advance. So it's also an asset to you because they are not due for payment yet, but you've paid for them in advance. So they call it prepayment. So if our other current asset is taking 40, then this is going to take 50. So we take 100, 050. So you can see the way we are creating the charts of we are taking the code of the account. Okay. So somebody that is very intelligent would have already gotten the concept of how to create the code of the account. So here we have had we've had other current assets. The next one is prepayment. So what are the things? What are the expenses that you can pay in advance? So what are the expenses you can pay in advance? So we can talk about prepaid rent, right? Prepaid rent and rate is an example. Prepaid rent and rates is an example. So here is also other current assets. So that is the account type. It's also going to be other current assets. So let's just fill down like three. Fine. So other current asset. Then after that, another thing that can be that another expense that can be prepaid is what we call prepaid insurance. Prepaid insurance. So that's another asset that's another expense that you can prepay. The another thing that we can talk about prepaid, prepaid. Then we have to put orders. So prepaid orders. So let's now come over here. So if this one is starting, they are all prepaid there, right? So we can just click on this side and just autofill it, and then we have something like this for it. So the next thing we want to do is want to so that is another. So we've done the first one, which is cash and cash equivalent. We've done accounts receivable. We've done other current assets. We've done prepayment. The next thing we want to do now is the next one is stock. So stock is another type of asset that we have, which you also need to give account of. So stock is another kind of asset. So stock, inventory, which we also call inventory. So yeah, we're going to have inventory. So this inventory. Now, if the last item, the last class of asset is 50, then this is obviously going to be 60. So we say 100,060. So inventory. Then what do we call inventory? Now, because we are in the spare parts industry, sorry, we are in the automobile industry, obviously in the mobile industry where they repair, they fix, they do a lot of things, the kind of description we are going to have for our inventory can be stock, right? Then what kind of stock? We can still spare parts. We can talk about spare parts, spare parts, spare parts stocks. Okay, so it depends on the industry you are. That is how what we inform the way you are going to create your. So this is going to be stock. This is going to be stock. That is that. Then we move on. The next thing is after our inventory. Is that all? Is that all the kind of asset that we have? No. We still have another class of asset which we call property, plants, and equipment. So that is the next one. Property, comma, plants, and sorry, and where's my and equipment and equipment, sorry, what plant and equipment. Yeah, that's that. So if the last item on the list was 60, the net item is going to be 70. The net item is going to be 70. So we have 100,070. So what are these property, plant, and equipment that we are talking about? So let me also do something here. I want this thing to centralize. No, not to centralize. I want it to be rightly aligned. Then these as well. Okay, I can leave this the way it is. So we now come here. Let me add something to this place. Right. So insert. Fine. So now property, plant, and equipment. We've seen that the first property, plant, and equipment that we can possibly have is the the properties that were bought at cost, right? Then also don't forget that we're also going to have the properties that the depreciation aspect. So we're going to say the first one is cost, property that were bought at cost. We have land, and building. So land and building. So this is land and buildings. Okay, land and buildings. Then here, under here, we're going to have fixed asset. It's a fixed asset. Okay, so that is that. Then I want to copy this. I copy this like this. I want to put it all through this place. Control V. That's fine. So that is land and building. The next one we are going to have is what we call, apart from land and building, what other asset can we have, which is under the fixed asset segment? We can also have what we call plants and machinery that was bought at cost. So in bracket, we now say plant and machinery. Machinery that was purchased at cost. The next one is another thing is motor vehicle. We now say we bought it at cost. We say motor vehicle, motor vehicles, right? Then the next one we can talk about is furniture and fittings. So furniture and fittings. Furnitures and fittings. The next one we can also talk about is apart from furnitures and fittings, we can have office office equipment, office equip office equipment. Then when we've gotten all these, then the next thing we want to do is one, two, three, four, five. So those are five classes of asset. The next thing we want to do is I want to now get the accumulated depreciation of them. So I will just copy it like this and come and paste it under here. Then I will edit it. And what I'm going to do is instead of me to have cost, I'll now have accum to show that this is the depreciation as part of it. Accum, right? Anything that has been accumulated, we go under that account. Then this is also accum, fine. All this we are going to be accum. So we are going to have the asset, we are going to have the depreciation aspect of it. Accum, accum. Here also we double click. Here we're going to have accum as well. Then the last thing over here, we're also going to have accum over here. So accum. Yeah. So now we are done with our assets. So let's autofill this one because all these are fixed assets. We just click and we autofill it to the bottom. So we are done with the assets portion. So we are going further. So this is how to do your chart of accounts, right? So an extension of your chart of account is your trial balance, right? So where you have the list of balances and all that. So you can say, okay, what is the list of balances? What is the balance for all these items? So we are going to come to that, but we are just creating just the chart of account today. So now the next thing is you see that we've looked at all the assets that we can possibly have in the era in their hierarchy, right? Or in terms of their liquidity, right? We've looked at that. The first one is our cash and cash equivalent, which obviously is very liquid, followed by our account receivables, followed by our other current asset, right? Which is here. Then we talk about our prepayments, right? Then we talk about our inventory, and lastly, we talk about our property, plant, and equipment. Now, the next thing we want to look at is the liability account. What are the possibilities that we can see under the liability account? So we're going to start. What are the things that we can see under the liability account? I think in our liability, one of the things that are very important under liability that we must not joke with is the fact that we are owing our vendors, right? We are owing our vendors. So the first item that we're going to recognize under now, and that I want to do is that instead of me to be scrolling up and down, I want to be able to see this heading at a go. So for those people that attended the Excel 30 days training, I taught them how to freeze the pane. So click on here, come to view and freeze your pane like this. So we freeze the pane. So we can decide to scroll down like that. So what is the class of asset that we have here? We are going to talk about the most important liability that somebody can talk about is the accounts payable account. People that you bought things from that you need to pay. So we can talk about account payables, account payables, right? So now for the account payable, we're also going to start with 200 because it's the first thing and 10, 210. So under this account payable, right, is also account payable, account payable. It's also account payable. Then here, we take here, we copy it, and then we bring it over here. We come and drop it here. Fine. Then the next thing we want to do, we are done with accounts payable. What other thing is also important? We talk about our accruals, expenses that we are owing that we have not paid. So those are the next things that are important under our liability account. So if this happens to be 210, then I think the next one should be 220. I guess so 200, 020. So 220. So the asset under our accrual account, we can talk about our accrued salaries, salaries and allowance, allowance, allowances payable. Okay, payable. So what is our accruals? So under this place, we talk about all the current liability. So this is all the current liability. Okay, so that's other current liability. Then I want to copy it, fill it down because I don't want to be typing it all the time. I copy it and I fill it all through this place. Other current liability, that is, oh, sorry, I need to copy, and then fill it down all through this area. Go to V. That is fine. Then the next thing is, apart from this, our accrued salaries and allowance payable, what other thing is what other thing is also very important like that to us? Let's say apart from that, we have what are the other accruals that we need to pay? We can talk about uh, sorry, accrued. So sorry, accrued. They will not say that accrued expenses, accrued, accrued. We are almost done. So say accrued expenses. So that's the next one. The next one we talk about, which is very important. We talk about value added tax payable. So this is very important. Value added tax payable. Value added tax payable. We talk about withholding tax payable. Then we talk about the next one. We talk about pay as you earn. Uh, pay pay as you earn. Then the next one we can also talk about pay as you earn. That is pay. The next one we can talk about pension. So that is also, yeah. So this one now we can just talk about pension payable. Pension payable. This pension payable. The next one we can talk about employers pension payable as well. We can talk about employers pension payable. Now you know the employer, apart from e deducting apart from him deducting 8% from staff salary, he also have the um he has the responsibility of contributing 10%. So that 10% goes to that employer's pension payable. Then another thing we are going to have on this our account, we are going to have what we call apart from us having that, we're going to have trade payable. And I will tell us why we have trade payable. So trade payable. I'll tell us why we have trade payable. We're going to also have something like on end revenue. We're going to have something like on end revenue. We're also going to have the next one. We're going to have staff creditor, like a staff that we are owing, staff creditor. Okay. Lastly, we are going to have opening, opening balance, opening balance adjustment. So opening balance adjustment. So we now come over here, want to delete this one. We don't need this one. So I think with this, we are done with our accrual. So what we need to do is that we now come and we just autofill it downward. Okay, since all of them they are other current liability. Then we move on. What other liability do we have? What other liability do we have? So another liability that we have is the loans payable. So we could have loans payable, which is what we owe the bank, right? So probably what we owe the bank, we could have loans payable, right? So maybe what we are owing the bank and so on and so forth. So that is the last liability that we are going to look at under here. So we now come here. So let's leave some gap again. Let's add some spaces. We add some spaces, and that is fine. So yeah, apart from accrual, then we are going to have um other liability. So we're going to have non-current liability. Okay, so that's going to be non-current liability. So this is going to be like a other liability. So that other liability under that. So if the last one took 20, this is going to be 200, 0 and 30, 30. So we come here. So we have what we are going to have under here, we can have bank loan payable. So we can have bank, bank loan payable. So bank loan payable is also going to be non non-current liability. Fine. So we are done with our equity, our liability. So let's now go straight. So under our liability, we have three broad categories under our liability. The first one is the one that is very important to us, to the business. We take money from our creditors and then we need to consider them first, right? So that is how we have them. Then the next is that we also have other people that we are owing, but these people are not we are not owing them based on the kind of trade that we are into. Okay, so staff that we're owing and a lot of other things, VAT, we are owing the government, we are owing withholding tax. So all these things they are accruals. Then the last one is our non-current liability. So when we are done with this, I think we can move on to the next segment, which is going to be your equity. So your equity, that is the owner's contribution or the owner's stake in the business. So the equity section, under the equity section, we are going to have something like, let's see what we're going to have. We're going to have something like our share capital. We're going to have so let's call it owner's interest. So under here, I'm going to call this owner's interest. So owner's interest. So if this is 300, right? So yeah, we are in another place. So this is 300. Right. Yeah. So this is 300. This because this is number three, which is equity. So it's 300. So we're going to start from the first thing is going to be 300, just like we normally do, 310, right? So we come here. The first item under here is going to be your share capital because obviously that is what those people contributed. We're going to have our share capital. So under your share capital is going to be equity. At the side there is going to be equity. So fine. So let's copy this and fill it downward. So we copy it and we fill it downward. Apart from equity, apart from share capital, what else do we have? We have retained earnings. Retained earnings. Retained earnings is also one. Another one. Another one is you can have your drawings. Drawings. You can have your prior year adjustment. Prior year adjustment. They can have your prior year adjustment. So let me check that this thing is still recording and we are still on the call. Fine. So everything is still fine. We are still is still recording. So yeah, so prior year adjustment and so on and so forth. So we want to, this is also an equity. They want to now make this one, since they're all equity, let's just autofill it, and that is it. So that's what we have. Then the next thing we have to do is that is the end of equity. Now we now go straight to our income. For our income, now um income is going to be, now what industry did I say we are? We are in the automobile industry. So what kind of income can an automobile industry get? So that is what we are going to consider when doing this. What kind of income will somebody in an automobile industry earn? So now I told us that income is going to be start from 400,000. So the first thing we're going to have under income, we're going to have you're going to have yeah. So we're going to say sales. Sales. We talk about what is sales, right? Then we're talking about money that we make from vehicle workshop income. So vehicle that money that we make from vehicle workshop income, and at this side we're going to have income. We're going to have income. So we now copy also. We now we copy it. So let me also put more space here because we need space. So we put space there. So when we copy this one, we put it right over here. So now the first income, because we are in an automobile industry, money that they make that belongs to the workshop, right? Probably we talk about the service charge. Yes, the service charge. We talk about sundry. We talk about procurement, sundry, and service charge. So that can go to the workshop income. Then you can also have another income that we call it maybe client, when they want to repair their vehicle, they need they need they need you need to put to replace some spare parts with them. So they have to pay for the spare parts. So that spare part money is also coming from spare parts. So that's why we say spare parts income, right? That's spare parts income. The next thing I'm going to have is maybe you want to wash the vehicle, you want to take it to car wash. They call it vehicle vehicle detailing income. So yeah, it's going to be vehicle detailing income. Then the next one you're going to have another one is sales. You're going to have vehicle inspect inspection and diagnostics diagnose diagnosis diagnosis. Then the next one um you're going to have alignment alignment and wheel balancing wheel balancing. Okay, then the next one you can have also maybe you also have a section where you can help them to fix their tire in case their tire is faulty. You can talk about vulcanizer income. Okay, so we are looking at all these streams of income, right? We are looking at all these streams of income. Then you can have overdue. That is in other words, late fee payment. So overdue, that is late or late fee payment. Probably somebody that is owing us and did not pay on time. Probably there's a fee, late fee income. Okay, so late fee income. Then the next one we can have is discount received. Discount received. Discount received. We can talk about sales order sundry income. right? Then the last but not the least, we talk about finance, interest, income. So we can talk about finance, interest, income. So I think all these are the kind of income that we can have for this industry. So the first item here is going to be 400, then and 10, just like we normally do. Then we can autofill it from here. We autofill it from here like this to the bottom. Oh, sorry, I made a mistake. So yeah, you autofill it. You press your control key and then you right click and autofill it to the bottom. So we don't need this one at the top here. So here are the can we call it sales? Let's call this sales, or we can call them incomes. Let's call them sales. Right. So that's that. Then the next thing I want to do is so this one I'm not going to waste. Yeah. So let's work on cost of sales, right? So this is very important. So over here, these are expenses, right? We're going to work on cost of sale. Then we now finalize and look at the other one. So we've done sales. Let's now go to our cost of sales. Now, because we're in this industry, there are certain expenses that we must incur, right, to actually bring in all this income. There are certain expenses that we must incur to bring in all these kind of income. So what are those expenses, right? So we just come and copy all the unique sales that they have. We'll copy it like this. We copy, then we come over here and want to put it here. Then the next thing I want to do is want to edit it. So this is going to be cost of sales is 5. So this is going to be 5,000, 500, sorry, 500, 1, 2, 3. So the first item is going to be 510, 500, then 010. So that's what the first item is likely going to be in that regard. So we have 510. Then we can also autofill. So let's now change this one. This is not going to be sales now. This is going to be cost of sales. So we have COS, cost of sales. That is fine. Then the next one we're going to have, we're going to have also cost of sales. Fine. The next one we're also going to have cost of sales. The next one we're also going to have cost of sales. Cost of sales. The next one we're also going to have, sorry, cost of sales. The next one we're also going to have cost of sales. Fine. So these are the likely cost of sales that we have because these are the major income head. So this major income head also we attract cost of sales, right? So that is that. We can delete this one at the top here. Now here we can let this one increase by autofilling it, right? Then the next thing is here, we want to call it costs of goods sold. So that's how it's going to be. So cost of goods sold. Then we copy this and we come and put it everywhere else. So put it everywhere else. Now, the next item. So we've been able to do so this is what I'm going to do. Let me put a yellow line to indicate that this is the next phase. This is the next phase. Then this also is the next phase. This is the next phase. Then this as well is the next phase. Yes, so this as well is going to be the next phase. Yeah, then this is the last, this is the next phase. Then this also right here is the next phase. Okay. So since we have this, right? Since we have this, okay, since we have all these, right? So what do we want to do? We want to go further to now say, here, we are done with our cost of sales. Cost of sales is 5, so it's going to be 500. Then yeah, this is our expenses, operational expenses. So I'm not going to waste time under this because it's actually lengthy. I'll just go and copy it from the other page that we have it so that I don't start typing. So let me just come here and let's go straight to where we have our expense, right? So this is our operational expenses. So from here, I've just copied from here like this. This is our operational expense. I just copy it like this. Then I come back to this place and I will come and put it here to save us time. I come and put it here like this, come to V. Then I also come back to, let me delete this one. Okay. Yeah. So what else we want to do? Yeah. So the next thing I want to do, I want to come here as well and copy the other administrative expenses, and that will be all for the class. So don't forget that this the reason why I did this pre-recorded class is because I needed us to actually go and I needed us to actually go and practicalize it, so that ahead of the class, before we meet, you can have something tangible to have at your disposal. So just like a little recap, I told us that when you are creating a chart of account, you need to have these headings: code range, account class, classification, codes of account, descriptions, and account type. Then we now use the element of account to put them. The first element of account is actually the asset account, right? The second one is liability. The second one is equity. The second one is income. The last one is expenses. So the expenses, we broke them down into three. We talk about the cost of sales. We talk about expenses, operational expenses. We talk about administrative expenses, right? So then we now look at the classification, different classification of asset. We talk about cash and cash equivalent. We talk about account receivable, other current assets, prepayment, inventory, and then property, plant, and equipment. We went further to look at liabilities. We have account payable, we have accruals, we have other liability. Then we came to our equity. Then we talk about our owner's interest. We listed all of them. Then we come to our income. That's we listed all of them. Then we also came and look at our cost of sales, right? So our cost of sales, we also look at them, right? Then at the end of the day, we now went further to look at other expenses that are administrative, right? So we look at them and we have them like this, like this, like this. So at the end of the day, we say the our chart of account is ready and we are ready to upload it. But before we upload it, we need to come back to Zoho Books, right? We come back to Zoho Books like this. Then when we come to Zoho Books, these Zoho Books. So in Zoho Books, okay, let me look at this. I think here in Zoho Books, we come to our chart of account, right? Then we now come and export from here. So that is all for this class. Do not forget to continue to practice, because practice makes you perfect. Don't forget to continue to practice, and that will be that for this training. So make sure you watch this video. Make sure you like, you also share to your friends that would need this training. Then also make sure that you also practicalize it, because nothing is actually free. Somebody is paying for it. If I am doing this training free, it doesn't mean that it's free all in all. I have to sacrifice something for you to have this training. So I would say, yeah, hope to see you in the class. Hope to see you in the training. Do have a lovely time practicing. So make sure that you also take this chart of account and replicate it to your own taste. So they say most times you can continue to copy something until you know it. So we learn by replication. You learn by replicating somebody's work, and that's why I'm giving you this ahead of time, because in the class a lot of people, we have a lot of questions they're asking and all that. So I needed you to have this so that it makes the work very easy for me. So thank you and see you on Saturday. The first class is kicking off on Saturday. So thank you.